Raleigh. Troy Noonan, the backpack trader. Troy, can you mic up and show us that you're here? Troy is going to tell us a little bit about himself, I know in a minute, but he's going to be talking about avoiding the whipsaw today. And that's I think it's one of the toughest things we do as traders is not get kicked around by that old whipsaw. But Troy, I was talking to a mutual friend about you a couple days ago, and he mentioned the Soros trade, your Soros trade.
Uh-huh.
And so I want you to kick today off with your Soros. Or can you video up?
Yeah, you can hear me, right?
I can hear you just great. Yeah.
Perfect. Okay.
We just want to see your lovely face.
There we go.
Hey, there we go.
I'm here.
Hey.
Been a long 3 days, but wonderful.
Yes, long 3 days. I don't have to go hair and makeup in the morning. That's the good news.
I'm glad you said I was the cleanup hitter because I was thinking, okay, I'm hitting in the pitcher's spot. So
no, we got the bases loaded for you, buddy.
All right, I appreciate that.
So the Soros trade.
Oh, okay, so well, when I started trading back in the early 90s, I got this pamphlet in the mail and learned what a head and shoulders pattern was. And it wasn't the shampoo, which kind of threw me by surprise. As it turned out, there was this pattern that set up on the British pound against the dollar. And I didn't know what it was. I innocently just kind of threw money at it and took a chance. And as it turned out, it was the same trade that George Soros took that broke the Bank of England. And that's a pretty infamous story, made many billions. You know, I made several grand. I bought a round trip ticket to Europe and started backpacking through Europe, and I played drums. So I traveled with some bongos and was sitting in with street musicians all over Europe. Great trip, real romantic trip. And I ended up meeting a Venezuelan friend in Italy. So we would go into bars and play for free beer. And anyway, to make a long story short, we went our separate ways. And about 6 months later, after returning, I received a fax inviting me to come visit him in Caracas. Yeah, remember what a fax was? I mean, that was like the big technological breakthrough in those days. So I went to visit my friend in Caracas, Venezuela, and a lot of stories behind that. But within the first 24 hours, one thing led to another, and I ended up somewhere that was very unusual where I met the person who I just now had my 25-year anniversary with last week. So George Soros made billions. I made a wife, and that's my best trade ever. And I was hooked on trading ever since, and the backpack trader was born.
Best trade ever. I love it. All right. Go ahead and you can share your screen. Let's make sure that we're all clean, and then you can take over.
All right. Thank you for asking that question. You stole my thunder, so I'll have to skip that part. No.
Oh, I didn't even know you were going to talk about it, but you don't have to skip it. You just, you know.
Oh, well. I never know what I'm to talk about because I tend to never follow my outline anyway, but I'll do my best. So in keeping with that, I changed my title.
Good. So do you, I just want to make sure you see the chat box so you can answer questions.
Let me,
Get to that part. If you mouse down toward the bottom, it'll pop up and say chat and pop out to the side for you.
Let me see something here.
Yeah,
oh, it's up on top for me. Let's see.
Oh, okay.
And I can also feed them to you, Troy, whatever you're most comfortable with.
Oh, there it is.
All right, Troy, take it away.
Okay, I got it. All right, thanks. So clearly you could see that my title has changed, and avoid the whipsaw and when to attack was what I was going to present, and I promise I will talk about that. But as I was thinking through things, I realized that those are just two of the many other secret trading hacks that I wanted to share today. So I changed my title and kind of restructured things a little bit. So let me just jump right in, and hopefully this makes sense. First, let me thank you for inviting me. I'm pretty honored to be on this amazing lineup, cleanup hitter, but a lot of hard acts to follow. I hope that I can deliver the goods. I think that if you stick with me to the end, that I will leave you with some golden nuggets that you can use with your trading that will hopefully make you a better trader, no matter what strategy you use or what your style of trading is. I find that these are universal concepts. So let's get started. So I'm going to be covering, first of all, as I go through my slides, which I've only got a few, I want to get right to my charts. And I want to show you one of my all-time favorite strategies, the Counterpunch Express. I've got a new version of it, and I've deconstructed it, and I'm going to reconstruct it in front of you and explain it to you step by step so you can see the sense in it, how easy it is, and how it accomplishes these things that I'm going to cover today. Okay, so mainly you can see in the bullet points here, how to take advantage of key exhaustion levels when buyers and sellers become exhausted. And I use this idea of Muhammad Ali and rope-a-doping and how he became the greatest boxer of all time. And we all know his technique where he would just cover up and let his opponent get exhausted. And then he would just come out and obviously win the match. And we're going to use that concept with our trading. The next one is knowing where the balance of power is between buyers and sellers. And that's a pretty important thing to know because, I mean, that's all there is on a price chart, right? You have buyers and sellers. Forget what symbol, doesn't really matter. Doesn't even matter what time frame. You've got buyers and sellers, and in the middle somewhere is the balance point. And if you know where that is, it gives you a lot of great advantage. So we'll talk about that, and I'll show you how that works in to the counterpunch. And then price action confirmation. When it all boils down to it, the price is going to do what the price is going to do. And we can put the odds in our favor in all different kinds of ways. Some of the speakers, obviously, over the last 3 days have shown you all sorts of ways to stack the odds in your favor. There's unlimited amounts of techniques that one can use. But what's important is that you can do it. Okay, so we're going to talk about that and how I use price action itself to corroborate my trade ideas. And then, of course, how to avoid whipsaw and know when to attack. And that's going to be pretty self-evident when I go through the examples, but I'm going to show you a filter that I use inside of the counterpunch that really helps mitigate whipsaw and choppy price action. All right, and then, of course, some of my favorite concepts, because my whole philosophy is that I don't want to be in front of the computer trading all the time. I want to actually trade as little as possible, but make as much as possible. And there are ways to do it. You probably have heard money management is pretty important when it comes to trading. So we're going to discuss how to spend less time and actually make more money trading that frees you up and gives you the freedom that you all want and can have always imagined for yourself. And then to get into some hot takes and key concepts to consistent trading profits, which is why I changed the name of this presentation. And if you stick around to the end, the Counterpunch Express, I'm going to give you a chance to get it. I'm going to tell you right now, under 200 bucks. It's a $1,000 strategy. I'm going to give it to you for literally pennies on the dollar, literally less than one winning trade. And if you stick around to the end, I'll show you very easily how you can do that. And then some other additional valuable bonuses that I'm including as well. All right, so hopefully that gets you all excited and you're all interested for me to continue. So let me tell you a little bit about myself. You learned about how I became the backpack trader and my best trade. That was back in 1993. So it was in 92 is actually when I made that famous trade that broke the Bank of England along with Soros, although he didn't know who I was. And quite frankly, I didn't know who he was either at the time. But years later, I'm still trading, did really well with the dot-com boom, as did everybody. I mean, all you had to do was fog a mirror and place a trade and you'd make money in those days. But I learned when the dot-com bust happened that I needed something different. And so I ended up sitting in a number of webinars similar to this one. And I ended up buying a strategy, and that changed my life because they heard me interacting with some of their members on a forum. And one day I got a call out of the blue. It was the owner of this company whose strategy I bought. And he asked me if I wanted to join his company as their first trade coach. They liked what I was saying. They thought I knew the system well, and they were growing. So I did. I decided to do that. But I also wanted to call a live trade room using their strategy. And that was probably more than 15 years ago now. But it's been 15 years straight at least that I've been calling a live trade room. And I can't tell you the awesome experience that has been day in and day out. But if you can imagine what it was like on the very first day when I've never done it before with the curtains opening, I mean, that's like going out onto stage and singing a solo in front of thousands of people. I mean, what's scarier than that? I was shaking, but there was this little voice that kind of went off in my head that changed my life. And it was 4 simple words: lean on the system. Think about that. Lean on the system. See, I was thinking at that time that if I just leaned on the system, I would know what trade to call, and it wouldn't matter if it won or lost because I was just then being professional. I was just doing my job. And if it lost, It wouldn't be my fault. It would be the system's fault. If it won and I didn't call the trade, if I didn't lean on the system, I'd look like a total idiot, right? I'd have egg on my face. So in a roundabout way, those simple 4 words changed my entire life, because what I learned at that point was the power of the strategy. It works in mysterious ways. If it's a strategy that you've proven to yourself, which is one of the nuggets I'm going to get into, then it's going to know more than you. Because at the right edge of the chart, you really don't know anything. Nobody does, right? You could take your best guess. Who was it that said there's a 50-50 chance? I think Avi, our last speaker. Well, we're going to stack the odds in our favor better than that. And you can. But the point is that we really don't know. Just because something wins 90% of the time doesn't mean that the 10% losers aren't going to come sequentially and you get 10 losses in a row. That can happen. All right. So anyway, kind of got off track, but like I said, I do that sometimes. These are some of the strategies I've created over the years, and each one of those is a brand name strategy that sold over 1,000 copies or more in 100+ countries, dating back, I don't know, like 12 years ago, okay, up till now. Counterpunch Trader, that came out like 6 or 7 years ago, and that's kind of what I'm going to show you today, because it's still really good, and I have a new and improved streamlined version for you. All right, so I've also mentored a lot of people. I've held countless live events in person and online. I got so many testimonials. I've been saving them since like 10 years ago. I got hundreds of them in my email. Anyway, that's who I am. Started the Backpack Trader. And recently, I'm also a best-selling author. So this book came out a few months ago. I was approached by this publisher. I thought it would be fun to do, and I actually just finished recording the audio version in the studio last month. But I just looked it up yesterday, and it's up to 70 ratings, and it's a bestseller on Amazon. So I'm kind of, pleasantly freaked out about that, because I never would have expected that to happen, but that's what's happening. So if you're interested in my book, there it is. So why the Backpack Trader? Well, you learned about why how I became the Backpack Trader, but the symbol of what it means is, I think, what's important and what you guys should all think about. And that's this whole idea that you want to trade to give you the kind of lifestyle that you want to have, right? You want to, it goes back to that trading less and living more. You want to be able to trade effectively, make as much as possible, but then walk away and do the things you love in life. And the Backpack Trader symbolizes that. It symbolizes absolute freedom, whether you want to trade from the Siberian Express, your own sofa, or anywhere in between, you can. And you could live the life you want to live. You can wake up when you're done sleeping, et cetera, whatever, however you imagine your life to be, trading can give you that. So trading is really important. Wouldn't you say? It's like one of the most important things you can do. So many people treat it cavalierly. They don't treat it with the reverence that it deserves. But what it can give you, if you really buy into the Backpack Trader philosophy, is so important that I would just encourage each and every one of you to take a step back, look at your trading, and think about what you can do to improve and get better, and to use trading to give you the lifestyle that you feel you've always wanted and deserved for yourself. Okay, so along the way, I'm sure like many of you, I've learned what it has felt like to make some money trading. I actually made a lot of money really fast, but I also lost it even faster, and I didn't like how that felt. This is all leading me up to, taking that phone call and buying that strategy with that company. And that company, by the way, is a company called NetPicks, who I happen to have left them like 2 years ago to start Backpack Trader. But they're great guys. That's who invited me in 15 some odd years ago. Okay. And as I said, it was because I was missing structure. All right. So the lean on the system. All right. You saw this. So what's important, what it means for you is kind of the stuff that I'm going to hopefully give you to take away from this presentation. And if you like what you see with a counterpunch, you're going to notice that you could learn it one time and basically use it for a lifetime. And that's why I'm showing you a strategy from many years ago, because it works just as well today as it did when it first came out. So something that can stand the test of time has got to have some credibility built into it. Okay, so let's get into some of my hot takes, keys to trading success, and then we're going to jump into some charts, and I'm going to show you these examples. So these are things that I have learned with 15 years of calling live trades and all the strategies that I've created as a result of my experience in the trade room. You can imagine many thousands of market hours in trading, as well as working with traders one-on-one, mentoring them, coaching them, teaching them, and learning that there's only a small handful of things that give traders problems. Probably many of you are still kind of wrestling with it. We all do, because we're human beings. But if you can figure out how to get over just a few key things, you can put it behind you and start getting consistent success. So the first thing is you have to prove it to yourself. Now, what does that mean? Well, if you're trying to learn a methodology and how to trade a certain way, you cannot take someone else's word for it, because in the end, there's going to be a random distribution of wins and losses. I don't care how good a strategy is. There will always be losing trades, winning trades, losing trades, winning trades. And most of us are, it's like being in a forest, but you don't know you're in the forest. All you can do is see the trees, right? Each trade is a tree. But the forest is a bigger living thing. And if you think of each trade as a tree, but think of your forest as the equity curve, well, some trees are going to fall, right? So you don't want to be running around trying to dodge a bunch of fallen trees. You need to get above the forest and look from above and see some trees falling, but look at your forest growing as a result of it. So I always think of the 1 step back, 2 steps forward, 1 step back, 2 steps forward. If you could achieve that with your trading, you can basically achieve financial freedom and become the backpack trader in your own, the way you've always imagined, right? Because you sacrifice a third of your trees in order to grow your forest 2/3 larger. So there are losing trades inside of winning trade strategies and trade plans. But if you don't prove it to yourself, if you don't live through the good, the bad, the ugly, and the great over and over and over, then when you're in the ugly, chances are you're going to head for the exit and run away. And you're going to basically throw the baby out with the bathwater and ditch or get rid of a really good trade strategy that could literally get you to your financial goals just because you're in the 1 step back. So you have to take the time to prove to yourself that despite the ugly, your equity is going to grow, your forest is going to grow. And then that is how you're going to learn what making money is all about as a trader. Okay. And there are techniques in how to do that. So one of the things I spend a lot with my strategies, and you're going to find a lot of this in the book I just showed you. All these concepts are in the book I just showed you, but in all the things that I teach, that you can't just say, okay, here's a trade plan. It's been winning 72% of its trades. I think I could trade it. I'm going to start trading it tomorrow. You throw some real money at it and it loses that day. And maybe you're going to try it again on the second day, but if it loses again, you're going to quit. And then there's going to be a 16 trade winning streak and you're going to already be gone. And that's what happens. That's how trading is. So you need to prove to yourself something works despite some ugly, or you're never going to succeed with someone else's thing or even your own. You have to prove it to yourself. Okay. And the way we do that is with a trade plan. So the power of the trade plan, I can't understate how powerful and important this is, because with a trade plan, you define everything. What you're going to trade, what strategy, when you're going to start, what your goals are, how many trades you're going to take, all of it. You define it so that it's very clear. And then it's really easy to go back and test and see how it would have done over the last 100 or 200 sessions, for example. In fact, I have this technique called the 3-step sniff test. So a lot of people always ask me, gee, I got your strategy. What do you suggest I trade? And I'm like, well, I don't know anything about you. How do I know what you should trade? I don't know what your skill level is. I don't know what your situation is. Do you have a job? When can you trade? When can you not trade? When do you want to trade? So you have to figure that stuff out. And once you do, you start through process of elimination, figuring out what is best for you. And then you could start defining the parameters of a trade plan. Then you could apply the 3-step sniff test. So someone always says, okay, I did that. I could trade when the market's open 2 hours every morning. What should I trade? And I'm like, well, here's what you can do. Step number 1 is put the strategy on your chart and ask this question. Are there enough trade setups within your trade session? All right, that's an easy question to answer. You just look and see. You can count the last 20 sessions if there's enough trade setups within the first however long, an hour, whatever you want to trade. All right, so you can easily answer that. The second question is, are the trades an appropriate size? So that's pretty easy to do also. Of course, you need some tools for this, but they're pretty simple. You could look and see and project. And with what I show you with the counterpunch, you're going to see it instantly. This trade risks 23 ticks. This trade risks 18 pips or 120 pips or whatever, depending on the trade. But you could see it and you could decide, okay, is that an appropriate size? If it's too small, it might be too noisy. You're going to get chopped to death, pay too much in trade costs. If it's too large, maybe you're risking too much, which isn't wise either. So you can find the right amount of trades, the right size trade. And then the final question of the 3-step sniff test, which is critical, is can you quit with a positive result a vast majority of the time while controlling your drawdown with minimal and efficient trading? Think about that. If you can quit most of the time with minimal and efficient trading, you can grow your account. You can grow your forest, right? This trade loses, this trade wins, but you're able to quit a majority of the time with a positive result, right? That's the secret. So you prove it to yourself with the 3-step sniff test. Now we can get into more comprehensive back testing techniques, which I teach and I provide really great tools for, but that's beyond the scope of this presentation. Okay, but I recommend that obviously you want to, if you have something really good, like you can sniff test 10 different charts and let 1 or 2, the best ones will present themselves to you. The cream will rise and you could focus on those and then really flesh out your trade plan from there. Okay, so I'm going to get into this as I show you the counterpunch in a moment. So let me go through these quickly. Your strategy should be able to dance with the market. So what does that mean? I mean, the market is in charge. If you can go with the flow and ebb and flow and kind of, you know, be spontaneous, ultimately, I say dance with the market, but you want to have a strategy that can present to you dynamic trade setups that can tune themselves and adjust to market conditions. Because if you have something that can do that, then it's going to always work. As markets change, the robustness of the strategy will adjust and tune itself. So the counterpunch trader has that in it. This is one of the secrets I learned from calling a trade room, is that there's no way to survive if you can't adjust and dance with the market, which is always changing and always in charge. Okay. Next is the power of lifestyle. And it goes to the thing of, you know, you want to live the life you want to live. You don't want to adjust your lifestyle to accommodate your trading. You need a trade style that will accommodate your lifestyle. And most people have that in reverse. Like I get a lot of questions about, gee, I really love this 4-hour chart. It's great. I could see all these winners. I want to trade this. And I'm thinking, okay, but you know, this trade setup had like 8 bars before it triggered in. That's 24 hours worth of bars before it triggered in. Are you going to be able to pay attention every 4 hours for the next 8 bars? What if the trade cancels? What if it was a reversing trade? What if you're driving to the dentist and all of a sudden your phone is alerting you, oh no, you got to stop and do something with your trading with your cell phone, right? That can happen. Do you want to live a lifestyle like that? Maybe you could do that for a week or 2. Maybe it's even exciting, but imagine 3 months from now, 6 months from now, a year from now, right? It's not realistic for most people. So think about your own lifestyle, how much time you want to dedicate to trading. Hopefully you take my advice and dedicate as little as possible to the actual trading, put more upfront time in your pre-production, proving it to yourself, proving and creating your trade plan. And then once you have that, that's what you lean on. That's the system. Remember that, lean on the system and spend as little time as possible trading and as much time as possible enjoying the fruits of your success. The 2% rule is quite simple. It's a money management rule. I heard, who was it, a couple speakers ago, Price Headley, amazing presentation. He's a little more aggressive than me. He was talking about a 5%, 5 to 10% risk. I say risk 2%. And the reason why is because even if you win 90% of the time, you could still lose 10 in a row. That happens. And it's still a 90% winning system because it really all depends about how big of a sample set you're talking about, right? But losing streaks will happen for sure. And so if you risk too much, you can wipe yourself out and then you don't have anything left to get all the winners when you get the massive winning streaks, which also will happen. But if you use 2%, you should be fine. I mean, you'd have to have some like a 200-year storm to wipe you out if you use 2%, if you got a good strategy. And then, of course, we lean on Einstein and his eighth wonder of the world, the power of compounding, because 2% of a $5,000 account isn't that much money, right? It's $100. But what about 2% of a $100,000 account? It's still only 2%. So it's relative to the size of your account. And as you grow your position, grow your equity, you can grow your position size while still keeping it within that safe 2% rule. Okay, so that's the whole, let's not argue with Einstein. The power of compounding is what's going to give you what you need to have the lifestyle you want, where you can trade less, live more, and achieve your total freedom through trading. Okay, so how many of you are using that? I would suggest you begin to think about how you can incorporate these ideas. Okay, the 5% art to trading. So this, I was going to say the power of mechanical setups, or the power of mechanical rules, right? Because if you have mechanical rules, you just follow the rules like a robot, like a machine. You're not a person. You don't have to have an emotional attachment to the outcome of your trades or anything. You want to just make sure that you're just running your trading like a business. But there's an art also. It's just that a lot of us try to be more of an artist than we actually are. So I say keep your discretionary decisions to 5%, and you could reduce that down to 1 or 2%, because you could literally create mechanical rules to for your art decisions. And what do I mean by that? Okay, so let's just think about a key level on certain instruments, like crude oil, for example. We know that the quarter century number, the 25 cent, the 50 cent, the dollar levels, those are all key psychological numbers. And if you think about your markets, you'll find that these numbers exist on most markets. So do you want to have if your strategy says to get short 2 ticks on top of major support, which might be one of these key numbers, the 5% art to trading would be to adjust your entry to the other side and at least make the price action push through, so that you don't get triggered into a trade that's going to bounce off support and go up and stop out. That's what I mean by 5% art. And that's a rule that's easy to implement and make mechanical, that if you get within a couple ticks of a major support and resistance level, then move your stops and entries a couple ticks beyond that level. You'll save yourself a lot of losing trades. Okay, it's like the cost of an insurance premium. All right, so that's what I mean by 5% art. And then finally, what's your title? And that's really just another way of saying, how do you think of yourself? Are you running your trading as a business? Are you taking it seriously? You should be the CEO of your trading business. Everything you do as a trader should be to grow your equity, to realize that it's a numbers game and you're not going to win all the time, but you don't have to in order to achieve your goals. Okay, so if you treat it as a business and you are the chief executive officer, it's going to cause you to take seriously some of these other things I've been talking about. All right, so let me just ask everybody one question. Make sure you're all here with me, and then I'm going to get into this demonstration and show you the counterpunch. So the question is this. Let's say that there is a trade that you took today. Maybe you traded today, maybe you traded a lot of trades, but we'll just say one. All right, and the trade was a winner. So let me ask you this. Did you make any money? The trade's a winner. Did you make money? And if you guys can answer that question, I know I kind of think what you're going to all say, but just let me know what you come up with, because it always cracks me up to hear what everyone says. All right, so I got a couple yeses. Not until it's closed. Yes. All right. So the obvious answer would be yes, right? But let me follow it up with the second question, and that is this. Today, yes. All right. That's the best answer so far by Robert. So let me just ask you this. If you took a trade and you lost, did you lose money? All of you that said yes should now be saying no, right? Because that's the obvious answer. So let me just cut to it's a trick question. It's a trick question. You didn't make money and you didn't lose money. And here's why. I'm going to assume that everyone in here is a trader. You're all traders, right? So that means, well, you have to take another trade. What about the next trade? What about the trade after that? Have you ever thought about that? What about the next trade? And the reason I'm asking you this is because when we're all in a trade, all we care about is the outcome of that trade. Some of you get nervous. Some of you sweat. Some of you pace. Some of you kick the dog when you lose. Some of you, who knows what, but usually people have some sort of emotional response, right? But the thing is that there's still another trade. You're all traders, is what we do. We trade. So if this trade wins, if this trade loses, we still have to take another trade. So how do we know if we're successful? How do we know if we're actually winning or losing? I mean, yeah, our P&L goes up and down, but the bottom line is that our P&L could be going down over the next week or the last month or whatever, but over the longer haul, it's been going up and up and up and up and up if we have a winning trade plan, because sometimes a winning trade plan will just not produce very well. And most people will throw, like I said, they'll run away from it. So most people wait until the trading looks good, and then they jump in and they get in right at the end of the 2 steps forward. And then the 1 step back happens. And right when they've had more pain than they can handle, what happens? They quit. They run away right at the end of the 1 step back, and they miss the 2 steps forward again. Does that sound familiar to you guys? Have any of you experienced that? Because I would expect to see a lot of yeses. Who hasn't experienced that? So there's a solution, and that is to rise above the forest and realize that you have to, number one on this list, you have to prove it to yourself, or you're going to fall victim to that whole chasing performance thing where you're always getting in at the end of 2 steps forward and you're always quitting at the end of 1 step back. All right, let's not do that anymore, guys. Be the CEO. All right, so let's move on. Time to see a demo. Let me grab my chart. All right, so I'm going to try to go through this quickly, but I understand that because I'm the last speaker that if I go a tiny bit over, I think it's okay. Correct me if I'm wrong, but I'm going to do my best to keep it within time because I know everyone is like ready for dinner. So this is today's chart. Every time I show Counterpunch, I always show from today using trade plans that we've been using over and over the same way, the same time. It's in the trade room. These are trade plans that have been published years ago, and it's the same one I'm going to show you, okay? So I'm not making any of this up. It's spontaneous. This happened today. So when you look at this chart, does this look like whipsaw and choppy price action? I mean, it looks terrible, right? And this trade plan starts when the market's open. So the YM, the Dow E-mini, is traded out of Chicago. And so this is set to Chicago time, and that means at 8:30 Chicago time is when the market's open, and that's when this trade plan starts looking for trade. So everything to the right of this vertical line. So anyone want to predict what's going to happen next? Kind of hard to know, right? In fact, anyone's guess is as good as anyone else's because the fact is nobody knows. So this is where we start layering in some really smart pieces of information that helps us stack the odds in our favor. Because if we could stack the odds in our favor and go back to some of those nuggets and hacks that I just showed you a moment ago, we can then begin to make money as traders, okay? So the first thing I'm gonna show you is what I call the exhaustion dots, okay? These are the exhaustion levels. This is when Muhammad Ali does his rope-a-doping. And so what these 3 dots show you when they're above the market is that buyers have gotten tired, and below the market, sellers have gotten tired, okay? And there's different degrees of being tired because sometimes when you see this sort of action, the market's kind of balanced and they're both kind of you know, the same power. But when one starts taking over, you can begin to see it. And when you start really seeing, well, I'll just kind of let it play out as we go. But the next thing we're going to do is we're going to put on a very powerful indicator that is called the signal line, and I've later renamed it the balance line. And this is going to show us the balance of power between buyers and sellers. And when you have these 2 pieces of information on your chart, well, you're going to see a whole new context, but you instantly are now better off than most of the traders out there. And so what we're looking for is buyers or sellers being tired, and then bars closing in the opposite direction on the other side of the balance line. And from that, we're going to then measure high likelihood targets, and we're going to use price action confirmation to give us trade setups. Okay, so let me just go on and show you a few more things that come with the strategy, and then I'm going to show you how this works. Remember, we're looking for trades from the right side onwards. So we'll see what happened today in a moment. So there's another indicator that comes with this, and it's called the high trend chop indicator. So I'm going to show you what that looks like. I've given this away for free in the past. It's also part of this strategy. So this is a really unique histogram because what it does is it simulates what's happening on a chart 5 times higher. So this is a 377 tick chart. So 5 times 377 is what this is all about. And it's looking at the fast trend on the slower time frame. So if you know anything about trend analysis, you know that you've got your fast trend, your intermediate trend, and your long-term trend. So this is looking at the fast trend, but on a slower chart. Okay, so we don't have to look at another chart. We have it right on this chart. And we're going to use that to corroborate some trades. And then finally, these dots along the line here, that is an indication of the Bollinger Band squeeze, and it shows you where pressure is building up. And a lot of times it's going to show you where there's choppy price action. And if we team it up with a 50 moving average, we will avoid some trades that will keep us out of some chop. And I'll show you how that works in a moment. All right, so the final thing I'm going to do is now I'm going to turn on the Counterpunch Express. I basically taught you how the indicators work. They're all price action based indicators. None of this is lagging, at least not the way we're using it. All right, so let me just turn on the actual calculator. What the calculator is going to do is going to take all these rules and it's going to start printing trades. So let's look to the right, and I'll talk to you about the first trade that shows up, and I'll show you how it works. All right, so here we go. There's a trade right there on the right edge of the chart. How do I know? That little plus sign is an entry because it's above the bar, above the balance line, I should say. It's a long trade. It has to be below to be a short trade. All right, so this fits within the trade plan rules, right? The market is opened, and now we're looking for our first trade. When we click on the bar, notice that you got some dots above. Those are targets, and the stop is right down here, right there where those exhaustion dots are, okay? And when you click on the bar over here in the data window, the entire trade prints out for you. You have your entry, your targets, your stop. Because we're going long, the numbers read in the direction of the dot. So from stop to entry to targets. On short trades, you'll see the opposite. You also get some really amazing information like how much you stand to win at each target, how much you need to risk, and some risk reward ratio. You have controls of this stuff, but this is just default settings. All right, so that's the first trade of the day, and you can place your order. Now the order is at 29,080. Well, 80 is a key level. We want to get it off the dime, so we're going to put it at 29.81, right? That's your 5% R to trading. So you can go ahead and place that order, and you can place it as a bracket order so that the stop and targets are attached, okay? And that's something that we teach in training. So that triggers in. So now that's a live trade. So this is what happened today. The goal of the strategy is to get to a target 2, and then if you can hit that goal, you're done. You've achieved your trade plan objective, and you're done till tomorrow, basically. Now, you could take this trade plan and duplicate it with other markets, other charts, other start times, stop times, whatever, but keeping it simple, this simple trade plan, we want to get to target 2 or 2 target 1 winners, okay? Now, what happens at target 1 is we're going to move our stop from here to here and put ourselves into a risk-free position. All right, so I basically just taught you the whole strategy. Now that's if you're trading with a single position at target 2, but you can trade with multiple positions and you can trail the balance line as well. So we'll look at those. All right, so I'm just gonna show you how this went up and hit target 1. So now you would move your stop from here up to here and you're in a completely risk-free position. Can you take profit at target 1? I mean, yeah, I mean, you can. It's 37 points. I mean, that's $185 for one contract. So yeah, you could. So what happens is now it's starting to trail. So this is what the old Counterpunch Express looked like, okay? But this is Counterpunch Express 2. This is a new and improved version. So now let me show you what else comes with this strategy, because I've enabled it with what the full Counterpunch Trader actually has, and that's the ability to track trades, and it does some trade management and trailing for you. So if I turn on track trades right here, true, now watch. Now you can see the stop. When the price comes up and hits target 1, the stop moves up. You just follow the stop, and now it's trailing, and now it's getting profitable, and then it stops out. So the first trade was unable to get to target 2, but it was a successful trade. It made a little money, but we still need to take one more trade. All right, so this is where the chop avoiding whipsaw comes in, because there's another trade right here. That one gets long, and it looks like it's going to stop and reverse to short. But we have a rule that we use. Remember what I said with the moving average. Let's show that moving average. These are things that I want to just show you step by step. When you are in the chop zone, remember I showed you these dots along the line? You do not want to trade in opposition of the 50 moving average. So when the 50 moving average is moving up like this, and it's coming between your target and your first target and your entry, you don't take it, you ignore it. So you just stay long, in other words, right? So this is a little technique I use, and it works not 100% of the time, but it works enough of the time to really stack the odds on my side. Okay, so what happens is you stay long. Remember what our goal is. We've got our whole trade here. We either got to get to another target 1 to finish our minimum objective, or at least to a target 2 to be profitable. And it comes up. There's another setup here. We're just going to ignore it. And it comes up and it hits target 2, almost target 3, but it's a perfect trade. And that trade made 48 points, right? 240 bucks. So you had a successful trade here, another successful trade here, and in 2 trades, the trade plan is done. And this is what I mean by trading less and living more. You don't have to do more than this. You can just show up and do the same thing again tomorrow and the next day and the next day. So these strategies, there's a question, results on the Express 2 when you have time. Yeah, the results, I mean, the results are varied because you could use this on so many different things, and I will show you some more examples. But what we're looking for with our trade plans and the techniques that I will teach you to prove to yourself, remember that concept, is that you want to win between 75 to 80% of your sessions. You want to be able to quit with a positive result, which means, and if you include some break-even sessions, you're probably going to lose between 15 and 20% of your sessions and win anywhere from 75 to 82, 83% with some break-even sessions in there, maybe 4 or 5% of those. Okay, that's what we're always after with these trade plans. All right, so counterpunch, these are just setups, and they're very accurate, and the strategy works because think about what it is: exhausted buyers, balance of power, price action confirmation, and then you have the fast trend on the higher time frame to corroborate from some setups. That's it. So what do you do with it? That, you see, when people ask, well, what are the results, blah, 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 it's a loaded question, because I could show you a hydraulic nail gun and you're going to be able to build a house faster than the next guy because you can shoot those nails so much faster. But if you don't learn how to use it and you actually are ill prepared, you're going to end up with a nail sticking out of your big toe, maybe your forehead. Is it the nail gun's fault? So it's a loaded question that's impossible to answer, but I will teach you how to use the strategy to hit your goals and show you how to prove it to yourself first. That's more important to me. I have a strategy that I created with Counterpunch that I use with my Spotlight Forex alert service. I have a Forex alert service. I use Counterpunch primarily for it. And we did over 10,000 pips last year. And one strategy in particular that it's for the last 15 years, it's been winning 85% of its trades, literally. But I don't like to talk about that. Can you win 85% of those very same trades? I don't know. You might lose 3 in a row and quit. You see? Prove it to yourself first. That's more important. Now, this works, question about whether it works on NinjaTrader. Yes, this works on TradeStation, NinjaTrader, MT4, and to some extent, Thinkorswim. What doesn't work on Thinkorswim is the trade tracking, but you get the setups, you get the indicators, and I teach you how to track the trades using the lines. Okay, it does not work on TradingView, but that is maybe a project I will take on in the not too distant future. All right, let's look at some more examples. What do you think so far, you guys? You like this? Let me show you a few things. So first of all, one of my favorite markets is crude oil. I trade the crude oil inventory report. I've been trading crude oil in the live trade room for years, and I record the crude oil report sessions every week. And I don't always put them on my YouTube channel, but let me just show you really quick. This is my YouTube channel. And if you were to go to Backpack Trader or, you know, search for that, you find a lot of these are the crude oil sessions, and these are all Counterpunch Trader. At least most of them are, right? I also have Spotlight Power Trader came after, but this is about Counterpunch, right? So you could see, look, crude oil, crude oil, crude oil, power of quitting, crude oil. These are all live sessions that I traded. I've been doing it for years, even before I spun off and quit NetPicks. They have a lot of my stuff on their channel dating back years. Same strategy every week, not changing a thing. That's got to mean something to you. All right, that could be part of what goes into proving to yourself if it works for so long. But I want you to see it for yourself. But let's look at today. Today there was no crude oil report, but we use the exact same approach. It starts at 8:50 every morning, same trade plan. All right, so where's 8:50? Here's 8:33. Here's 8:46. So that's going to be the 8:50 trade. And you can see what happens because I already wrote it down. But check it out. You know, if you have nothing else to learn, you click on the setup bar. Now the numbers are reading down. It's a white trade, which means it's using the histogram as part of its corroboration. This is actually the Counterpunch trade. I'm not going to explain it because it'll just take too long, but I do explain it in training. You could turn different setups on or off. Most of what I'm going to show you are these green trades because that's all you really need. But this trade plan uses a couple other setups that come with the strategy as well. So that was the first trade, and it came right on down. And these, you're going to find that the way these trades are measured, and I'll teach you this, it's a special algorithm. I'll teach you the math behind it. It makes for very accurate trades. Like this one coming up, that wasn't a trade we would take, but look how accurate target 2 was before it went down. Now it's going down. Look at target 2. And that's pretty darn accurate, right? We want it to go past it a little, but there's nothing worse than hitting it right on the nail, bouncing off and not getting filled. So we, you know, even more perfect is when it goes a little beyond, but it's beautiful, right? So one and done. This trade literally took 12 minutes. And if you built your position up where you're putting on 2% risk and you were able to make $200 a contract to target 2 and 280 to target 3, and you traded 2 contracts each, 4 contracts, you just made almost $1,000 in 12 minutes. Think about it. 4 contracts. Imagine when you have 8 contracts, 15 contracts, all 2% of your account. See where this is going? You understand these concepts, why I set this presentation up with those hacks and nuggets prior to showing you this. I want you to think about what I talked to you about earlier. Okay, so that was today's session. The same trade plan that you're going to see on my YouTube channel over and over for crude oil and the crude oil report. And years later, here it is, today's action, same chart, same rules, same everything. That doesn't mean it wins every day. It just so happened today it did. 80% of the sessions, more or less. All right, so let's look at some. How about how many of you are options and equities traders? I bet most of you are. Yeah? I'm going to get to your questions in a little while, so keep typing them in, but let me just quickly go through some of these swing trades. It's the exact same strategy. You don't have to learn anything new. When I click on this trade, I already showed you where the entry is. I already showed you the targets, the stop, how it works. This is a spider, but instead of trading a $300 stock or ETF, we're going to trade these simple in-the-money call options. You don't have to overthink it. Just get an option that's far enough out so you don't have to worry about time decay. You will learn the average length of a trade and then buy an option 3 times that. Even if you pay a little more, it's okay because it'll come back to you. You're never going to hold the option until it expires worthless. Worst case scenario, it comes down and hits the stop and you lose. You still sell the option back and recapture some of your premium. So you don't even take a full loss on the option. This is such a powerful concept. But check this out. these targets, they're beautiful. You look at the reward here and you could see that the stock itself, it made $7.18 to target one. A simple in the money call. What do I mean by that? Well, the entry is 324. So buy a 299 call. That's it. Whatever the call right before the entry, slightly in the money. That's it. You don't have to overthink it. This is a 298 call, okay? Slightly in the money. Hits target one in just a matter of, I don't know, a couple weeks. It made a 55% return, and you're now trailing at risk-free for the remainder of your position. 93% return on to target two, and it's just one trade. And all these trades are adjusting to market conditions, right? It hits target two and then starts to come off. You might say, well, yeah, but it kept on going up. It did, and we know that in hindsight, but we don't know that at the time. When it starts going down, you get stopped out. It could have kept going down. You don't know. You just have to take each trade as it comes, right? If this one triggered in, it would have lost 35%, $178. But the option itself was that you only lost 35% of the cost of the option. That's what I mean by getting some of your premium back, all right? So just going forward, it continues to adjust. These trades are all different sizes, all these different, 33%, 80%, 23, 20. I mean, if you make 10% a year, you got a career on Wall Street, right? This is all per trade. Can't underestimate the power of this. All right, so then we had the crash because of COVID, right? So see this here? I'm only showing you the green trades, and you could even see how the green trade picked up the second leg down to a perfect target. See how perfect that was? But I could turn on my white trade just to show you how that one works. Some of you are going to get into the more advanced setups. This is the actual counterpunch trade, which basically means counter trend. But check this out. It calls the trade, and look at the perfect target. And this is on February 24th. This is COVID right here. Remember that? Well, there it is. Look at how much. I didn't even write in how big of, what you would have made on these, but they were huge trades. And then if I just go, let's just speed forward to now. This is the most current trade. Look at that. And it just stopped out today. See how that is? 37, 65, 112%. Anyway, you have little trades inside of those too, because you can turn on additional setups. We call them add-on trades, and each one is accurate in its own right. Look at this target 3 and how it's stabbed right up to it right there. And that could have been another trade. It would have been a different option, a different strike price. This little one here, this little one here. So there's lots of opportunity here. I realize I'm getting short on time, so let me just quickly go through one more. The Qs, these are the Qs. I just want you to see. This is another indicator that comes with, it's a bonus indicator. What it means, this is what it's called trend mode. And basically, when the line is blue, you only go long. And so in this case, you avoid a losing short trade here. When the line is red, you go short. Okay, again, you'd maybe turn on the white trade for that one. But the point is that some trade plans really work well with the trend mode indicator. So red only short, blue only long, and that's an indicator that used to come with the full Counterpunch Trader, a $3,000 product. And this is a bonus for you today that comes with Counterpunch Express 2. That's a separate indicator. Just to quickly go through one of the markets we use in my Forex alert service, these are the last X amount of trades on the pound yen. Obviously, this is a high flying one. It wins a lot. You can just kind of look at the pips. There's nothing new to learn, different market, but these are pips, and it's all based on the size of your position. And there's a purple trade. So you have a green, purple, and white trade. So some trade plans, you might only use one setup or a combination. This one uses all three, and you could just see how, there's some short trade setups, but they never trigger in because that's part of the price action confirmation. And remember, I said that was an important key element. So the price action, literally, once you get a setup, and I remove the the exhaustion dots just to make the chart look cleaner, but you could put them back on and see where the exhaustion points are. But the point is that just because you get a setup doesn't mean that it's going to be a trade we're going to use. The price still has to confirm by moving towards and through the entry. That's key. And that avoids some trades, like in this case, or this case. So really, you know, price action itself, price action is always king. So here's the current trade. So will it win? Will it lose? I don't know. But this is part of a service that's been very successful, and this trade plan has worked for many years. And then you could use it for day trading. Same strategy. This one's using trend mode. This is just looking at, you know, today's pound US, going all the way back to yesterday's late Asian market session. So if you want to day trade when you get home from work, you could literally trade in the evening with some of these trade plans using counterpunch. This one gets short here, takes its time, finally comes all the way down, but you can see a successful trade. But what about today? It got rather choppy. You could see there's this setup here actually loses, right? There's a losing trade, but then we get a small winner. And then we have during some time when you probably don't want to trade, but it still wins. So this trade plan actually starts at 8:30 New York time. And the first trade comes right here at 9:25. And you want to go to any target that's 10 pips or more, and you could scale out. So you could scale out a third of your position here, 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 and trail. But if you hit one target of 10 pips or more, you're moving your stop to break even, and you've hit the minimum goal of the trade plan, right? So one of the techniques, I didn't put this in the bullet points and I should have, it's part of dancing with the market, is we use a concept called the power of quitting. So when we hit our goals, it empowers us to quit trading so that we can walk away and let our trade plan, we want to hang on to the money that we make and not give it back by continuing to trade and then all of a sudden we're introducing this level of randomness. See, we want to have trade plans that we've proven to ourselves. So we empower ourselves to quit trading. We call it POQ, power of quitting. And the idea is you take what the market wants to give you, not what you want from the market. Take what the market wants to give you, then quit. Some days will be more, some days will be less, some days you might have a loss, but ultimately you're going to win a lot more than you lose. You're going to grow your account, you're going to grow your position, you're going to use Einstein's eighth wonder of the world, power of compounding, and you're going to achieve your financial goals. That's why I say take trading seriously. Okay, so what happens here? Hits target one. That was good for 14 pips. You know, take a couple pips off for spread, and then it stops out, and that's it. The minimum goal, but it was one and done. What's wrong with one and done? So that's today's pound US. All right, let's change the symbol. Let's try the Euro US. Another popular market, works well. All right, let's just go back to 8:30. See what happens. So that's too early. It was a nice winner, but it's too early. Here is 10:15. And that one, if we're following trend mode, we have to wait for it to come back up. But ultimately, we can't take the trade until here because that's when the line is red and it comes down and smashes through all the targets. See that? So one and done. That's using trend mode. If you're not using trend mode, you just get in right here. You might say, hey, but that's red, but it's red when it closes and it's already below, you see. I guess when it comes up here, you can catch it because it was still red before it closed blue. I don't know. But anyway, you get the trade. The stop's way up here, comes down, hits all the targets, and stops out at the trailer. So, I mean, today was one and done. We're going to ignore target one because it wasn't 10 pips. So we're going to get out at target 2 for 15, target 3 for 20, and then stop out at the trailer. So one and done. Let's look at one more. One of my favorite pairs is the pound Aussie. Got some trade plans that just never seem to lose with this pair. I mean, they lose, but you know what I mean? Rarely. So this is at 8:30, and I usually don't use trend mode, but since it's on here, we'll just use it. So there is blue. That means we can get long right here. Kind of choppy, but I don't really care because the trade is the trade, and I'm not going against my chop indicator, right? So knowing when to avoid chop and when not to worry about it's pretty important. That's the first trade. I'm going to take it. Don't want to think too hard because I might talk myself out of it, and that's never good. Prove it to yourself, and you'll never talk yourself out of the trade. That's good for 25 pips to target one. The stop moves up and starts trailing, doesn't quite get to target 2, and then stops out. But 1 and done again. So 3 pairs, all 5 minutes, didn't change anything. Same start time, same rules, same everything, today's market. I can go on and on. I could show you so much, but I'm like literally out of time, and I want to answer some of your questions, and I also want to show you how you can get this strategy. This is a $197 strategy. It's actually more than that, but that's what we're letting it go for tonight before we raise the price. Told you about my story. You got the hot takes. All right, I wanted to talk to you a little bit about just some social proof, over 300 positive testimonials. I just did a screenshot of my inbox, right? So this is my newest backpack trader inbox, and you can see over 84 testimonials already. But then my old one, my trade coach Troy box, when I was with NetPicks, over 200 testimonials dating all the way back to 2011. So, I mean, I've got hundreds and hundreds of these. And here's one about the Counterpunch Express. This is from last year. Anyway, I'll just let you take a moment just to look at that. But he's doing really well. He likes to use it on natural gas. And then this one here, Scott McCown, who loves the 377 and the 610 tick with Counterpunch Express. He uses it on crude oil. And you could even see his video on my YouTube channel where he talks about Counterpunch Express. So some pretty cool stuff. Okay, so you can get everything we just saw for how much? Good. Let me show you. So let's just skip to the bottom. 197 bucks. It's like one winning trade. I showed you so many trades that made more than this. The whole Counterpunch Trader. This is the Counterpunch Express. I showed you everything it can do. The Counterpunch Trader is a more stacked strategy. It costs about $3,000, which includes automation and everything. It's very stacked with some additional tools. But I always say, start with Counterpunch Express because some people never move off of it. It's really powerful. I'm like, it's laughably cheap. I'm raising this price. I can't sell it for this price anymore. It's just this is a $1,000 product. Easy. So we're giving it away for $197 right now. And what it comes with is everything I showed you, all the indicators, in-depth training, video-based training that's it's all very well detailed. I've been doing this a long time, and this is one of my best trainings that I've ever done, I think. The trend mode indicator that I showed you, where when it's blue, you go long, red, you go short. When you're in trend mode, bunch of trade plans already done for you. But more importantly is I'm going to show you how to create your own trade plans so that you can prove it to yourself and build that foundation of belief for yourself that's so critical for success. That's more important. The concepts that are in the book I showed you earlier is in this training. You get a free month to my weekly crude oil trade room session. So you can come to those for a month. I'm going to give you this very powerful tool called the Ultimate Trade Analyzer, which is a pre-programmed spreadsheet, which quite frankly, that in itself is worth well over 197. That's like one of the most powerful trade tools you can use for proving something to yourself and building your trade plan so that you can be successful. And I put a lot of time into that, and I get a lot of people asking me about that in the trade room. So that's a benefit that you get for no extra charge. And then my 2 ebooks, the 12 Powers to Successful Trading and the No-Brainer Guide to Trading Success. And if you make those 2 your trading religion, in addition to the strategy, you will become a rock solid trader and be in the strongest position you could possibly be in. Far better off than 90% of the traders out there. Because what's in those 2 ebooks is a lot of what I've been talking to you about today. And I took a lot of those nuggets of pearls of wisdom, let's say, came out of those for this presentation. But it gets into a lot more depth and gives you a step-by-step plan on how to succeed, regardless of what strategy you use. So that all comes with this very valuable package too. This price has to go up. I cannot sell this for $197. I can't. I mean, I used to sell the original Counterpunch Express without the trade tracking for $797. All right, so look what I've done to it now, and now it's $197. This is going to go up probably sometime in the next week or 2. But this is what it is for you guys today.
All right, Troy,
so
and we have gone ahead and put the link in the chat, so that people know that that's how they can click it. Do you have a link do you have the link that you can put on the screen there?
Oh, I do. Yeah. Thank you. Raleigh put it in the chat for everybody. All you have to do is click on it. And there it is on the screen as well. If you want to type it in, netpixtrading.com/CPX2 hyphen order.
Yep. I'm going to grab the screen here for a minute. You can see it right there, folks.
Yeah, good. And you can just click on the link, which is the easiest in the chat box.
Absolutely.
So, or screenshot that or whatever, get it next time. I want to make sure I get all the questions answered. Someone said, does it work on Forex? I just showed you it did. I want it. How do I get it? Right on. I don't blame you. Just to reiterate, it works on TradeStation 9.5 and 10. It works on NinjaTrader 7 and NinjaTrader 8. It works on MT4, and it works on Thinkorswim. But what won't work on Thinkorswim is the trade tracking features, but I will teach you how to basically use the same concepts with what Thinkorswim gives you. So you don't lose anything, and you just, you actually become better at the strategy because it forces you to think a little more. But other than that, I just want to thank my friends at Westmark and Trade Thirsty and Trade the Moment. You guys have been awesome. I hope I cleaned up the shop for you and wasn't just the pitcher striking out. So hopefully it was valuable to people. And thank you for your time, everybody.
Absolutely. Troy, thank you so much for that presentation. Terrific. I will tell you this, folks. I identify with everything that Troy shared with us today. I'm a futures trader, and I know and learned the hard way, but I hate when people say learn the hard way, but I did learn the hard way that there's some fundamental things that you have to have. And really, what Troy covered with the hot takes and the keys to success. I mean, once again, as a futures trader, you've got to understand and practice those things. And I think it applies across the board. There were a couple of quick questions, and I love the way you answered the question about the results of this. You have to experience it for yourself. In your opinion, Troy, before somebody were to risk any capital in the market, how many trades do you recommend that they should take to build up a track record that's strong enough to let them know that, yeah, I really got the hang of this?
Raleigh, I look at that as probably the most important question anyone could ever ask and get an answer to. And I get that all the time. I put people through a series of steps. I want them to, first of all, do the 3-step sniff test and look at least 100 sessions, at least. Inside those sessions, how many trades within that trade plan window, start time, stop time, goals, et cetera. Right? Let's say you've done all that. Let's say you have your trade plan, you like the results of the fast test and everything, and now you want to prove you can actually do it. There's this magic number of 20, it's the magic number of 25, basically. And I learned this as a drummer. I've been playing drums for 48 years. So you might say I'm pretty good with patterns. I have a feeling that might be why I've been able to create these winning trade plans and strategies, because I something about patterns, I don't know. But anyway, when I'm learning a drum rhythm, every single time, after playing for decades, it's still like learning how to walk again. A brand new rhythm. I got to teach my body, my brain how to coordinate. And eventually I could play it one time real slow. And then I work at it to get it 2 times. But ultimately, when I could play that pattern 25 times in a row in tempo without a single mistake, it becomes a part of me. Now it's like riding a bike. I will never forget it. Who thinks about walking? They don't, right? You put your one foot in front of the other, you walk without thinking. I want your trading to be like that. So when you have a trade plan and you've proven it to yourself with the homework, the pre-production, the next step is what I call dress rehearsal. Can you run your trade plan 25 times in a row without a single mistake? Now, what's a mistake? It's not a losing trade if it's the correct plan, it's the correct trade. But you know what is a mistake? Turning your head and answering an email and missing the trade.
Sure.
Your wife
or moving a stop or moving a profit target.
Any of those are obvious mistakes. But what about running back to the keyboard and tripping on the rug and spilling your cup of coffee on the keyboard and shorting out your computer and missing the trade? That happened to me. That's a mistake. Start over again. And whatever it is that prevents you from the next trade of your trade plan is a mistake. You're the CEO. Prove you can be the CEO. If you could do that, imagine what an amazing trader you're going to be when you finally get that 25 in a row without a single mistake. Imagine.
Yeah, and I think that's the key. The key there about being the CEO. Don't kid yourself, people. you know, be honest with yourself. If you're going to learn a system and you're going to practice it, you know, be honest with yourself. Prove to yourself that you can do it before you risk capital. Troy, we have a lot in common. I've been drumming for 50 years. So I understand completely the drummer's attitude and the
Oh, right
approach
on.
and your concepts behind rhythms, etc. I didn't know, but thank you so much for your time. I think you did a great job wrapping things up. I love your approach to the market. Your presentation actually encapsulated an awful lot of what the speakers before you had to say as it relates to the kind of mentality that you have to be a winner in the market. And then you took that next step to share, these are the tools and the techniques that I've created, you know, for how I am consistent in the market. And I really do appreciate that. Folks, you can see the offer here. Counterpunch Express 2.0 tool, lifetime access to customer counterpunch indicators. The trading plans are worth their weight in gold. I can tell you, if none of you had a plan, you get a chance to see a professional plan. They're worth their weight in gold. 1 month access to the weekly crude oil report session, the other things that you talked about. And I just want to conclude by saying, I believe you said the platforms were NinjaTrader, TradeStation, MT4, and also Thinkorswim has most of the capability there, so it's fairly widespread. Thank you very, very much, Troy. Really appreciated your presentation. I hope you have a great evening.